Hello, welcome back to my YouTube channel. This is Aishwarya. We are seeing chapter 3 of Accountancy class 11 under CBSE Syllabus. This is part 4. So in this video, we'll be covering what is debit and credit, what are T accounts, and the numerical problem 10 will be solved and explained. So first we'll see briefly what is debit and credit. So debits and credits are the basic foundation of double entry system of accounting. Okay, so we all know the accounting equation, assets is equal to capital plus liabilities, right? So in order for that to balance, you have to pass a debit and a credit entry for every transaction that is being recorded in the business. So usually debit will be the left side and credit will be the right side. Now let's see what will be recorded in the left side of the debit. So first, if there is an increase in the assets, okay, so that will come in the left side. If there is increase in the expenses, or if there are any expenses that the company is incurring, that will be debited. If there is any losses, okay, that will also be debited. So on the contrary, if there is a decrease in assets, so assets can be anything, cash, bank, equipment, stock, building, anything. So if there is a decrease, that will be credited. If there is a decrease in expenses, that will also be credited. If there is decrease in loss of this profit or income, that will be credited. Okay, so what comes in will be debited. So on the right side, the credit side, okay. So if there is an increase in liabilities like loans, creditors, bank outstanding, payables, all that should be credited. And if there is an increase in the equity like owner's capital, reserves, that will be credited. Or if there is any income that is coming in, okay, sales, your revenue like rent, commission, interest, dividend received, all the incomes will be credited. So what goes out will be credited. So this is just a brief explanation. So if you want a more detailed insight about what are debits and credits and how it actually works, there is a separate video which I have made. The link of the same is given in the description. You can go through that in detail and come back to this. Next we'll see what is T accounts. Yeah. Now let's move on to your textbook. So if you see, the rules of debit and credit is given here, yeah, in a T account. So asset side, if the asset increases, it will be debited. It will be if it decreases, it will be credited. Okay, and liabilities, if it increases, it will be credited. If it decreases, it will be debited. And capital, if it increases, it will be credited. Decrease will be debited. All the revenues or the income should be credited. Okay, if it decreases, it will be debited. All the expenses, it will be debited. Decrease will be credited. So these five accounts you have to keep in mind. Okay, so based on this, we will do the transactions. Yeah. Okay, now we'll just see this example problem, and then once you get a fair understanding, we'll do the numerical problem that is given in the end of the chapter. So Rohit started a business with 5 lakh. Okay, so now what is coming into the business? Cash is coming into the business, which means there is an increase in the asset. Cash is a current asset, right? So that is debited. And now cash is coming in what form? It is coming in the form of capital. Okay, so that is going in as capital. So capital account will be credited. So one transaction, two side entry, cash account is debited, capital account is credited. Clear? Now we'll see the second transaction. Now opened a bank account with the amount of 4,80,000. So what he is doing, whatever cash has come into the business, of which he is taking 4,80,000 and he is depositing it in the bank, right? Now what is happening? Cash is going out of the business. Okay, so there is a decrease in the asset. So that is credited. That's why it's been put on the right hand side. Now on the other side, what is happening? That money is being deposited in the bank account. Now bank account is also an asset, okay, a current asset in the name of the company. So bank account will be debited. So money is coming inside the bank account. There is an increase in the bank balance, or you can say it anyway. So it will be debited. So cash, there is a decrease in the asset, there is an increase in one other asset. This is debited and this is credited. Okay. Now next we'll see. Third transaction. What he is doing? He is buying furniture for 60,000 and issued a check for the same. So he is buying furniture and paying it through a check. So furniture is a asset. Okay, there's a increase in the value of asset. So furniture account will be debited. Now, how is he paying? He is paying through his bank account. He is issuing a check, means he is paying it through his bank account. Okay, so bank account, so the amount 60,000 will reduce, right? So it will go out of your account. So there is a decrease in the value of a asset. So hence this 60,000 will be credited. So one side furniture account is debited and the other side it is credited. Hope it's clear. Next, transaction number 4. What is he doing? Bought plant and machinery from Rajmi Lal for the business for 1,25,000 and an advance of 10,000 in cash is given. So what he is doing? He is buying an asset for machinery, which is for the business, which is plant and machinery. He is buying it from some Rajmi Lal. Okay. So for that he is paying 10,000 in cash. Advance he is making a payment, and since the name is given, this is a credit purchase. So the balance 1,15,000 he will be paying it later. Okay. So here now we have to see 3 accounts will be considered. So what will happen? The cash, the 10,000 is being paid. Now first we will see what is coming in. So what is coming in? Machinery account is machinery is coming in, which means there is an increase in the value of asset. Okay. So the entire 1,25,000 will be debited, of which 10,000 is paid through cash. So 10,000 your cash account will be credited because there is a decrease in the asset. Okay. Now Rajmi Lal account. Now who is this Rajmi Lal? I have made a credit purchase. So he'll become my creditor. I have to pay him on a later date. How much should I pay him? 1,15,000 I have to pay him. So he is my creditor. There is an increase in my liability. So that's why I am crediting Rajmi Lal's account. Okay, it's clear? You can see 3 accounts is being hit. One is plant and machinery account. Okay, the mode of payment is made through cash and advance is paid, and then the rest is your creditor. Okay, 1 debit and 2 credit. If you see the total, it will be the same. 1,25,000, here 115 plus 10, again 1,25,000. Then 5th entry, goods purchased from Sumit Traders for 55,000. So he is purchasing goods from Sumit Traders. So this is a credit purchase again, but what he is purchasing? Goods. So if he is purchasing any asset, you will mention the name of the asset. But if he is purchasing goods, you can directly mention it as a purchase account, because that is your core business. You are buying the goods and you are going to sell it. So there you need not mention goods account. You can mention the name as purchase account. So purchase account, there is an increase in the value of goods, so it is debited. Okay, goods is a current asset, right? So it is debited. Now he has to pay to Sumit Traders on a later date. So this is not a cash purchase. Okay, so Sumit Traders will be the creditor. So we have to pay him on a later date. We owe him money. So there is an increase in the liability. Okay, so the increase in asset, increase in liability, increase in asset is debited, increase in liability is credited. Next, goods costing 25,000 sold to Ranjani Enterprises for 35,000. Okay. So here what's happening? There is this sales account. Okay. So sales account, there is a income, 35,000 is coming in. So income, there is an increase in income. So that will be credited. Okay. Now Who's this Ranjini Enterprises? He is our debtor. We have made a credit sale. So they owe us money on a future date. Okay, which means it is a current asset for us. So there is an increase in the current asset. So that will be debited. So increase in liability, increase in asset. So this is credited and this is debited. Okay, next. Paid monthly store rent of 2500 in cash. Okay, so rent account, rent is an expense. So we know expenses should be debited. Now, how are we paying this? We are paying this through cash. So there is a decrease in the cash balance, which is an asset. So that's why this is coming in the credit side of the cash account. Clear? Now, we'll see the 8th transaction. Paid 5,000 as salary to the office employees. So what is salary? Salary is an expense. Okay, again the salary account is going to hit in the debit side. Okay, since it is an expense, it will be debited. Cash will be credited. Okay, why? There is a decrease. Cash balance is decreasing. So if there is a decrease in the asset, it has to be credited. Next transaction is the last one. Received check as full payment from Ranjini Enterprises and deposited the same day into bank account. Now Ranjini Enterprises has paid us. Okay, so initially remember we had a debit balance, so it is an income. Now money is coming in, so any income has to be credited. Okay, now there is an increase in the current asset. Money is coming in, right? So that has to be debited. So what is debited? Bank account is debited, Ranjini account is credited. Now Ranjini account is closed. Okay, I hope this was clear. Okay, now we'll see problem number 10. So first transaction is invested 4 lakh cash and office equipment with 1,50,000 in a business called Bobby Consulting. Okay, so here again 3 accounts is getting hit. So first it is the cash account. Okay, and next will be the office equipment account, and the one more account will be your capital account, right? Yes. Now cash account, cash is an asset, so increase in asset will be debited. So 4 lakh will come on the debit side. Okay, office equipment, again that is also an asset, so 1,50,000 will be debited. And capital, so a part of capital has been come in the form of cash and a part in the form of office equipment. So together maybe we can write it as capital in the credit side 5,50,000. Okay, so there is one transaction hitting 3 accounts. If you see debit side, one entry is 4 lakh, the other entry is 1,50,000. Credit side it is 5,50,000. So debit, the amount in the debit side should be equal to the amount in the credit side. Okay. Okay, next we will see B. Purchased land and a small office building. The land was worth 1,50,000 and the building worth 3,50,000. The purchase price was paid with 2 lakh cash and a long-term note payable for 3 lakh. Oh, so many stuffs happening here. Here I think we'll have to add one more account. Now, so what has been purchased here? First it is land, okay, worth 1,50,000, and a building. Now why am I writing all this in the left hand side? Because all these are assets and increase in the value of the asset should be debited. So I am writing this in the left hand side. The purchase price was paid with cash 2 lakh. Okay, so first 4 lakh cash has come in the transaction, previous transaction. Now there is a decrease in cash. The cash is being paid, so that's why I am crediting. Okay, and then there is a payable account. Payable account, we are supposed to pay them in the future. Okay, that is a liability. So 3 lakh we will be crediting. Right? So one transaction hitting 4 accounts. So land value, if you see, debit side it is 1,50,000, building it is 3,50,000. Put together it is 5 lakh in the debit side. In the credit side, if you see, cash is 2 lakh, payables, which is a current liability, 3 lakh, put together is 5 lakh. Okay, this transaction is done. Okay, now let's see transaction C. Purchased office supplies on credit for 12,000. Okay, so yeah, what is coming in office supplies, right? So office supplies is an asset. If there is an increase in asset, you got to debit it. Okay, now they have clearly mentioned it's a credit purchase. So your payables will increase, or your creditors. Payables or creditors both the same. Already we have a balance of 3 lakh. So this 12,000 also we will add here. Okay. So now it's D. Bobby transferred title of motor car to the business. The motor car is worth 90,000. So Bobby is owner of the business. So what's coming in is motor car worth 90,000. So it's an asset. There is an increase. So we'll debit it. So he is transferring in the form of capital. Okay. So initially, remember, he's got office equipments, cash, and now he is transferring motor car. So capital has to be credited. E. Purchased 30,000 additional office equipments on credit. So it's a credit purchase of office equipments. Right? Yeah. Already 1,50,000 was bought in the form of capital. So to that 30,000 more is purchased. It's an asset. Increase of asset will be debited. Since it's a credit purchase, payable or creditors will be credited. Okay. So already there was 3,12,000 with the previous transactions. So to this we will add 30,000 as well. Okay. One debit and one credit entry. F. Paid. It is 75,000 salary to the office manager. So salary is an expense, right? So you have the salary account. So expense have to be debited. So since it is an expense, it is paid through cash. So cash account already has a credit of 2 lakh. 75,000 and this 75,000 is salary. Okay, so expense is debited and decrease in asset is credited. Okay, debit and credit corresponding entry. Next, G, provided service to a client and collected 30,000. So it is a service revenue. We can take this as service revenue. So any income has to be credited. Okay, now they've already collected money, so we will have cash. So the current status of cash account is this. Now this is asset that is coming in, increase in asset, so we'll debit. So income is credited, asset, increase in asset is debited. Transaction H, paid 4,000 for the month's utilities. So utilities is an expense. Okay, so expenses have to be debited. So seeing the cash account, so there is a decrease in the asset, so cash account has to be credited, right? Transaction I. So transaction I says paid supplier created in transaction C. What is transaction C? Purchased office supplies on credit for 12,000. So whatever we have purchased, we are clearing it. So which means we are paying the cash, right? So cash, if you see, okay, this is the position of cash account, sorry, 4,000. Okay, now they are paying, so cash balance will decrease, or the asset is going out, so we have to credit it. And here payables or creditors, we already have 3 lakh, right? 12,000 this transaction, and there is one more credit purchase. Now there is a decrease in creditors, so decrease in creditors means we will debit it. So asset is going out, we have credited, decrease in creditors, we are debiting, one debit entry and one credit entry. Let's see transaction J. So purchase of new office equipment by paying 93,000 cash and trading in old equipment with a recorded cost of 7,000. So here we have to see they have bought a new equipment by paying 93,000 cash, right? 7,000 by selling the old. So 1 lakh is the value of the new equipment, right? So this is the office equipment account. So there is already 1,50,000, 30,000. Now 1 lakh has come in and 7,000 has been sold off. Now 1 lakh has come in, increase in asset, we are debiting it. 7,000 decrease in asset, since it has been sold off, we are crediting it. And this side in cash account, what happens? 4 lakh, 30,000, here 2 lakh, 75,000, 4,000, 12,000, and now 93,000 is being paid as cash. Okay, so there is a decrease in the value of asset, we are crediting it. And if you see in office equipment side, so 1 lakh of office equipment new asset has been bought, so there is an increase in asset, we are debiting it. and 7,000 worth is being sold. So net, if you subtract these both, 93,000 is debited. Okay. Likewise, cash, 93,000 is credited. So debit and credit is happened with the same amount. Transaction K, completed services of a client for 26,000. This amount is to be paid within 30 days. Okay, so there is this service revenue. Okay, so already we have 30,000 in that. Now 26,000, which is an income, divided. Now here this is a credit sales kind of a thing, a credit service you can say. So they will pay the company within 30 days. The time period is given, or you can say the client account, since they have asked client in your textbook. Now this is a current asset. So increase in current asset, or you can write receivables. Okay, it's a receivable for us, it's an asset. So 26,000 is debited here, and here income is credited. Transaction I, received 19,000 payment from the client created in transaction K. Now what's the transaction K? Completed services of a client for 26,000. This amount is to be paid within 30 days. So here if you see, we'll first take cash account. Your 4,30,000. This side it is 2,75,000, 4,000, 12,000, 93,000, right? Now 19,000 has been received, so 19,000 will be debited since there is an increase in asset. Here in the client account or the debtors account, this had a balance of 26,000. Now there is a reduction by 19,000. This will be credited. So cash will be debited, client account will be credited. Last transaction M, Bobby withdrew 20,000 from the business. So the drawings account, it's kind of an expense, right? So money goes out from the business, so expenses will be debited. And if you see the cash account, okay, $75,000, 4,000, 12,000, and there is a decrease in asset. 20,000 is credited. Okay. So with this we've come to the end of the problem. If you have any doubts, do let me know in the comment section. If you like the video, do like and subscribe to my channel. Share it with your friends. See you in the next video. Until then, bye bye.